Getting kind of hungry here. Let's talk about a food company, General Mills. Gosh, they've been around for a long time. Maybe you can tell me how long they've been around for. But their symbol, I was surprised, GIS. And I guess GM was taken by General Motors, but GIS is a symbol for General Mills. They are in the packaged food industry, short on the company, 6%, about 87% institutional owned. Good PE ratio of 12.3. However, the industry is only 3.7. Wow, that's very low. I know they're having a lot of trouble with the diet drugs here. Price of sales, 1.5 versus 0.4. Price and book value, 3 versus 0.9. Price of cash flow, also expensive, 9.7 versus 2.4. And the PEG ratio, nothing great here, 22.6. So I like a PEG ratio around 1 or 2, not 22. As far as the earnings growth goes, 5.6%. Now, the industry shows growth of 77.1%, which is extremely high. I'm not sure why. Sales over the last year were down by 1.1% for General Mills, but yet the industry up 368%. 5-year growth rate from the analysts on the earnings, 0.5% for General Mills versus 0.1% for the industry. They do pay a decent dividend, 4.8%, only use 52% of their earnings to pay that out. And we do see on the balance sheet, current ratio a little bit low, 0.7 versus 1.3, and debt a little bit high at 1.5 versus 1.1. Intangible assets also very high, 69%. That's a worrisome sign there for write-downs down in the future, perhaps. Net profit margin 13 versus 6.3. Free cash flow pretty good, 2.5 billion, but the industry is at 6.8 billion cash flow.
And I don't know that the intangible assets, the big issue there is all the acquisitions that they have done over time buying the brand. So I'm not surprised to see intangible assets that high. Answer your question, the company was founded in 1866.
Wow. So I guess all that time, they've acquired a lot of companies.
They've acquired a lot. And, I mean, give you some of the names so you can kind of be like, well, General Mills, what do they do? You know, I mean, I'm going to say they're the cereal company. I mean, they have Cheerios, Cinnamon Toast Crunch, Cocoa Puffs, Cookie Crisp, a lot of those good names there. And then they have, some other stuff as well. They actually do have a pets division with Blue Buffalo. They do have, it looks like Fruit by the Foot, Fruit Roll-Up, Lucky Charms, again, another cereal there. Something with Haagen-Dazs. I don't think they own Haagen-Dazs, but maybe they facilitate some of the sales for them or something.
In the grocery store, maybe.
Potentially, yeah. So, I mean, they have, a lot of big, well-known brands. The concern is, the current administration and their push against food dyes.
Oh, yeah.
How is that going to impact General Mills? Because I would personally assume that Gushers and Fruit by the Foot would be large offenders of food dyes. I'm just guessing here.
I think you're guessing probably pretty right.
And I have no idea how this change would impact profit margins, but that is definitely something you would want to understand if you're looking at investing in this company. But looking at the current price here for General Mills to begin, $50.52. 52-week range, the low here, $50.19. They actually did hit that level on Friday, and the high, $75.90. Going forward for the company here, we go out to December. Oh, no, actually, they report on a fiscal basis. So we go out to May 2027. I see estimated earnings per share of $3.86. Gives it a target sell price of $64.08. Forward PE is around 13 times, and it is so interesting. I remember General Mills, their PE used to be in the 20s because, again, it was a defensive name and, consumer staple. You weren't really worried about that variability to it. But this is, again, one reason we don't like to overpay for companies because things change. And this industry has changed so drastically, I'd say, within the last 3 years. You talked about the diet drugs. We talked about the new administration, kind of them attacking packaged foods. I almost think 13 times earnings for limited growth and the potential concerns for this. I would want to see the valuation fall even further before I would even become interested in a business of this nature.
Well, I have some good news for you because we use two different platforms because we want to check to see if they're different. Mine is different. Mine shows going out to May 2027, $4.20 based on the mean of 11 analysts. So if you do $4.20, you're probably going to PE a little bit lower. So maybe that would be a little bit better. And the range is not too bad. $3.97 on the low side, $4.61. You collect that nice dividend. I just don't know what's going to play out, as we talked about with the new administration on the dyes and stuff. And then also, too, GLP-1, whatever. Is it
GLP-1s.
Yeah. That is hurting because you can't eat as much. And I don't think cereal is the big thing it used to be. Do you eat cereal?
No, I don't eat breakfast,
I-
actually.
I don't eat breakfast either.
Yeah.
I have a protein drink. That's it.
Yeah. So I guess we're not the market for General Mills,
We're
but
not.
then who is? You know, and
I don't know.
I do know, again, my wife is, now that we have 2 daughters, is very keen on, diet and food and so forth. And I think she might be a little bit over the top sometimes. Hopefully she didn't hear that. But,
You're in trouble
she is so against giving our kids any of these cereals because they're just so bad for you,
Full of
ultimately.
sugar
I mean,
and
who
dyes,
gives a kid Cookie Crisp and is like, wow, that's a great way to start the day?
And you don't remember this because you're too young, but back in the 90s, a show called Seinfeld with Jerry Seinfeld, he would have cereal in the daytime. Yeah. Those days are gone. I don't think anybody even eats cereal. I don't know. All right, we'll have to do a survey to see what kids are eating cereal.
Who eats cereal now? And I was going to say, too, talking about changing times, this stock is definitely not done well. I was looking at the 5-year return. It's actually down here 16% over that 5-year period, 10-year return down 11%. That does not include dividends, so you're still probably up over that time period with dividends, but not exciting returns, to say the least.
Yeah, and it's one that used to be, you could always do well on food companies, but I just don't understand what's going to go on with these diet drugs. I still think there's going to be a problem someday down the road, but for now, I just...
We're running out of time here, but I was going to say, I saw that there's some company, their stock went up a bunch because they are a different drug that allows you to offset some of the bone loss or something from the diet. So to fix the drug, they add a new drug. And it's just like, geez, you're going to have to then probably add another drug down there. And I just, as you said, I think there are problems that could occur with these drugs down the road with side effects that people aren't even thinking of just yet.
Actually, in the newsletter we did talk about, and I got to get to the company, but the newsletter we talk about the second largest exporter or importer of the United States is actually Ireland. I'll kind of give that away. Most of it from the diet drugs going from $15 billion, maybe next year to $30 billion. So they are very popular, but I think there's going to be issues, and maybe that's when you buy the cereals.
Maybe.
Yeah.